What's going on, guys? It's K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having fun in the cryptocurrency circus that's been going on right now. Still not much price action in the charts, and we did point out that we have seen one of the highest levels of recorded Bitcoin shorts on Wall Street pretty much in the history of Bitcoin. Now, we are also seeing the dollar index have a little bit of a bounce up. Is it going to be able to make its way all the way back up again here to around this 109, 110 level? If it does get rejected off that, that probably would solidify that we are going to see the dollar drop a lot lower. However, Bitcoin is sitting at this very, very critical level, which I've pointed out multiple times. And, you know, the next area of support, and you could see right here in the volume range profile, is right at around $13,272, right? You could say maybe it gets a little strong around the 13.9K level. So that is something I want to talk about. And also, considering everything that's been going on with the FTX debacle and people just pulling their coins off exchanges, we have seen the lowest exchange balance for Bitcoin pretty much since all the way back here in April of 2018, right? So what does this mean? Because some people say, oh, well, the fact that there's not a lot of Bitcoin on exchanges means that there should be, you know, when there is demand, there's less Bitcoin available, which should push the price higher, right? We're going to talk about that. Now, there's a lot I do want to go over in these charts, guys. We're going to cover the charts, but again, I am going to push the charts to the end of the video because what I want to talk about is everything that's going on right now. And, you know, I hate to keep talking about FTX. Trust me, I'm just as sick of talking about it as you probably are about hearing about it. But there are some experts that are calling what we're seeing in this FTX drama, this contagion, worse than what we saw with Enron. But the bigger question is then why are none of these big media outlets really showing this, right? They seem to be whitewashing, essentially, you know, in the term of, you know, making something look better, you know, than it is and hiding the facts, right? Why are they doing this? Could there be something bigger at play? Well, I will give you a hint, guys, and you're going to want to stick to the end of this video because there are just even more weirder, stranger connections that are being made. And I'll give you a hint, guys. CBDC, World Economic Forum, New World Order. Not to be a conspiracy theorist, but it's starting to get a little crazy out there, guys. So that's what we're going to talk about today. We're going to tie all that in. If that sounds good to you, you know what to do. If you're not subscribed, definitely consider it. We're going to dive in, and we're going to, again, unfortunately, have to dive a little bit into this FTX situation. Now, I'm not going to go over this whole thing, but Sam had come out recently and was having a DM with this person over from Vox. And, you know, you could kind of see just by reading this how just inexperienced and really not suitable for the position that Sam was. You know, in one sense, he says, you know, screw the regulators, all this other stuff. They can't distinguish between good and bad. You want to know the truth? No one's doing it, not even in real finance either. And, you know, they pick his brain and he says, you know, there's some truth to it, but also true that I didn't want to do sketchy stuff. And then he starts saying that, like, you can be a hero, but do something sketchy and the public will forgive you. But if you lose and you do something sketchy, then you're the villain. Like, just really cryptic and getting super weird with the things that he's saying. You know, it really just shows he doesn't know what he's talking about, essentially. This is where he does the comparison. Like I said, I'm not going to go into all this. It's really, honestly, I read through this whole thing and it's really just a bunch of garbage, really, if you read through it. He really doesn't say anything. He doesn't really take full responsibility. He kind of blames a lot of it on Alameda's mishandling. And, yeah, if you guys want to read this whole thing, you're more than welcome to. So just go check it out. It's on Vox, and it's Sam Bankman-Fried tries to explain himself. I'm really not going to go into this because, truthfully, I didn't take much away from the conversation. But, you know, some of the things that we can see, okay, you know, outside of Sam's cryptic tweets, is we have this formal declaration of the ongoing Chapter 11 bankruptcy. Now, according to this filing, Alameda Research had loaned $1 billion directly to Sam Bankman-Fried, while FTX director of engineer Nishad Singh had also received about $543 million in loans from the company. Now, Caitlin Long, she says, I don't think that it's an understatement to predict that FTX's Chapter 11 will be the most complex bankruptcy in U.S. history. No clear commercial law roadmap regarding crypto for the judge to follow. U.S. bankruptcy law has presumption against extraterritoriality, every creditor doxed, right? And then this is the other crazy part. Just in, Alameda was exempt from being liquidated when trading on FTX. So you may remember the interview that Sam did in the beginning when he set it up, and he was talking about how, oh, it's just so different, the way that we're setting it up. We're just building it from the ground up, and like it has all these different features. So the features that you were talking about, Sam, were the features that protected you guys and Alameda from getting liquidated while the rest of your customers had to suffer while you used their funds so that you could fund your little carnival game that you were playing in the background while losing money. I mean, literally, Caroline came out and said in the video that I showed you 2 days ago, she said, we do not use stop losses. Really? You don't use stop losses. How much money are you managing? Can you imagine if a real hedge fund was like, yeah, we're just not going to use stop losses and just hope for the best, right? You know what happens when I don't use a stop loss and my price target gets hit? I get liquidated. But not these guys. No, they had the whole system, the whole house rigged on their side, and yet they still lost all this money, guys. This definitely is unwinding to be something crazier than even we could have imagined. Speaking at the Milken Institute 4th Annual Middle East and African Summit, CZ was actually talking about when Sam came to him, and he said, when he came to me, I knew he was desperate. If we can't help him, there's probably nobody else that would. Probably a bunch of people passed on the deal before us. He admitted that he had intended to explore a lifeline for FTX in the interest of affected users, but due diligence carried out after signing a letter of intent quickly highlighted bigger problems than Binance had imagined. The deal was subsequently scrapped. Now, we have the newly appointed CEO believing that this was just an absolute mess. It says, John J. Ray III may have unwounded major corporate failures, but in over 4 decades of legal and restructuring experience, he claims to have never seen such an unprecedented management failures as in the case of FTX. In the latest filings with the federal bankruptcy court, this is what he said. He said, never in my career have I ever seen such a complete failure of corporate controls and such a complete absence of trustworthy financial information as occurred here. From compromised systems integrity and faulty regulatory oversight abroad to the concentration of control in the hands of very small group of inexperienced, unsophisticated, and potentially compromised individuals. This situation is unprecedented. Ray also stated that the FTX group did not keep appropriate books and records, convenient, or security controls, convenient, right? The hack, with respect to its digital assets. And this is where you're seeing Zero Hedge say that this contagion could be worse than Enron. Look at how all of these companies connect to all of these other individuals, people, LLCs, whatever you want to call it. And this is just the tip of the iceberg. This is only what we're able to see in the preliminary organizational chart. We know that there are a lot of bigger deals happening in the background. They're coming out right now with Genesis and these other exposures and all these earn products going bust, right? It was a house of cards built on lies, built on leverage, right? Over leveraging, irresponsibly leveraging in a system where, oh, guess what? Doesn't matter because they can't get liquidated. Must be nice to be Alameda and FTX. And pretty much if you win, great. If you lose, oh well, oopsies, right? Come on, guys, this is ridiculous. And look what Bitcoin Archive points out. And this is what is leading me to think that this is bigger than Sam. This is bigger than Dan Friedberg. This is bigger than even Gary Gensler. It goes even deeper than this. Sam Bankman-Fried donated hundreds of millions of dollars stolen from FTX customers to politicians and related organizations. The New York Times, Washington Post, and Reuters all now whitewashing his actions, which have ruined millions of lives, propaganda, and corruption in action. Look at these titles from Reuters. Sam Bankman-Fried did financial system a favor? Here we go from Washington Post. Before FTX collapse, founder poured millions into pandemic prevention. Oh, okay. So let's talk about his philanthropy using stolen funds, but we won't mention that part. How Sam Bankman-Fried's FTX crypto empire collapsed, but no mention of how he might have been responsible for this? Very, very weird. Why are they protecting him? Why are they defending him? Why do you have guys like Kevin O'Leary coming out and saying, maybe we should give him a second chance? A second chance? A second chance, guys? Actually, you may know this, but the first baby was born that pushed the world population over 8 billion. This was a couple days ago. So, the Wolf of Wall Street, All Streets was saying, Scott Melker, hey, if we all just donate $1, right? Just $1 from every person on planet Earth, we might be able to fix the debacle, right? That's the $8 billion that you guys need. Now, here's where it gets crazier. So Steve Barber actually pointed this out. He says the current events are not making sense to you because you fail to consider that the fiat maximalists are attacking Bitcoin. They're attacking the narratives and they are generating regulations to protect their legacy fiat racket. You can see right here, Jim Cramer, no oversight, none. Perhaps the 3 trillion world that was crypto asked for no oversight and was granted no oversight. These all could have been deemed securities and this could have been prevented, but there was no deeming, I think it was. Those interested in legacy finance and their quintillion privilege are ushering in regulators. They want Bitcoin to be censored. And here's a little bit of a thing from Jake Chervinsky. Now, this guy's an actual lawyer, by the way, who is familiar with crypto. And, Steve says the regulators are corrupt. Large crypto companies are corrupt. They know that more regulation will build them regulatory moats. They know they can leverage regulatory corruption to kill off their competition. He says all the while the SEC was apparently in secret talks with FTX to grant them exemptive relief and give them a regulatory advantage over U.S. firms. That's backwards. The SEC should be helping U.S. firms compete against offshore rivals, not the other way around. The SEC has failed us. Or conspiracy time, was it intentional? FTX also allowed trading of derivatives subject to CFTC jurisdiction. It was first and foremost a derivatives exchange. He points this out. When BitMEX did that, what happened? The CFTC prosecuted them for operating an unregistered futures commission merchant. FTX was doing the exact same thing. But where was the CFTC? How come they're still not stepping in? Very strange. The CFTC was busy working on FTX's proposal to offer derivatives to U.S. retail participants. They published the proposal for public comment this March. Meanwhile, it was prosecuting U.S. firms for minor violations and filing a flawed lawsuit against a DAO. The CFTC has failed us. They put the guy behind bars, right, a week after the Tornado Cash incident, which all he was trying to do was basically, protect people's privacy, right? But no, that guy's in jail. But Sam Bankman-Fried and FTX and Alameda and everybody affiliated, they're all still walking around playing video games, napping, talking, tweeting cryptic tweets, while all of these people have lost money. Huge losses, not just retail. We're talking massive, massive losses here, right? Now, I'm not going to go over this chart again. We've already talked about the way that these guys are all affiliated, right? Glenn Ellison was the former boss of Gary Gensler. His daughter is Caroline, who dated Sam Bankman-Fried, who is an MIT graduate, in which Gary Gensler was the former professor of MIT, right? But this is just a fun little picture, right? I mean, we could draw lines and connect things and make guesses, right? Well, Elizabeth Warren had a little bit to say about this. Let's see. The implosion of FTX must be a wake-up call for Congress and financial regulators to hold this industry and its executives accountable. Too much of the crypto industry is smoke and mirrors. It's time for stronger rules and stronger enforcement to protect ordinary people. Well, where was that protection when SBF went down? Oh, wait, conveniently, guys, Elizabeth Warren is known for being the anti-crypto senator. I tweeted about this if you guys are following me, who helped her draft her tax legislation in 2016. That's right, guys, and you can see the article right here. None other than Joseph Bankman, the father of Sam Bankman-Fried. I think it's quite apparent that all of these guys are in bed with each other, actually literally and figuratively. I don't know what was going on in the Bahamas. We don't really want to know what was going on in the Bahamas, right? But let me ask you a question. Was this just a coincidence or not? You can't make this stuff up. On November 30th, the New York Times was planning to host a live event with Sam Bankman-Fried, President Zelensky of Ukraine, Larry Fink, the CEO of BlackRock, and Secretary Janet Yellen. Wow, that's an interesting lineup. Would you pay $2,400 to see these guys speak? I certainly wouldn't, but I'll watch the replay. It's definitely becoming clear that this was organized in some fashion. This was by design. It's possible that Sam Bankman-Fried was a front man. He was a fall guy or a patsy, right? Could be. Most likely, possibly. He still is affiliated with it. But, like Tom Lungo points out, more meat on the bones that the Fed and the New York boys blew up FTX on election night on purpose. If this was just a cleanup operation, this meeting would not be on their schedule. Very, very interesting. Shall we dive a little bit deeper? Now, this is where it gets crazy. And I tweeted this yesterday, guys. I said, seems all too convenient in the timing, don't you think? Just in, New York Federal Reserve and multiple global banking giants start a 12-week digital dollar pilot. That's right, guys, a 12-week pilot with major banks. The New York Fed said the program would explore the feasibility of interoperable networks of central banks, wholesale digital money, and commercial bank digital money operating on a shared multi-entity distributed ledger on a regulated liability network. Banking giants include BNY Mellon, Citi, HSBC, MasterCard, PNC Bank, TD Bank, Truist, US Bank, and Wells Fargo will all be participating in the pilot by issuing tokens and settling transactions through simulated central bank reserves. Is this that moment? Is this that tinfoil hat moment where you have to say to yourself, was this an intentional implosion? Was this designed so that they could step in and create this central bank digital currency and say, hey guys, there's too much fraud and corruption happening out there. Wink, wink, like we didn't cause that, right? So come on over to our side and use our central bank digital currency, where we'll be able to monitor everything that you do. And if we don't like what you're doing, well, guess what? We'll just cut off your wallet. You won't be able to spend your money. Oh, using too many carbon credits, are you? Guess you're not flying on vacation this winter, right? It's very 1984. It's very scary. And does it go even bigger than just the US? I mean, this is like a Black Mirror type thing, right? Where it's like, like in 1984, essentially, if they don't like what you're doing. Now, the question is this going to be a fully transparent blockchain if they do create these CBDCs? Probably not, right? We're probably not going to be able to see what they're doing, but they'll be able to see what we're doing, right? Imagine a social credit system, a centralized digital currency. You could see where this is all going. And if you think that this is like, just crazy talk, I mean, have you seen this guy, Klaus Schwab, World Economic Forum? Like Mark Moss points out, while the world is watching crypto melt down, this guy, an unelected leader of no nation, is presenting to the G20, instructing the top global leaders how the world will be restructured or reset. Now, I could play this clip for you. Which, by the way, like, this guy is like a typical Bond villain. I mean, first of all, like, he's got that German he just sounds like he wants to take over the world, right? And this is the thing. Are they looking to attempt to create this sort of one world, right? This one sort of super currency, this one level of surveillance, this, universal, globalist policy, right? Now, this is like crazy talk, and I don't usually go this deep on the channel, but it is something to consider. Now, just to throw it out there, I'm a Star Trek fan. I watch Star Trek. I like the idea of, the Federation, the planets and all that other stuff. And I like how it's like the USS Enterprise, right? It's like the whole world. I like that, right? In theory, it would be great if we could all just work together and play together and, stop all these wars and we would quit fighting with each other. But the problem is like we've seen with even just something as small as FTX, SBF, we know that there usually is something darker about this. There's greed, there's corruption, there's these power-hungry individuals, right? And, could it have all been just a major setup? And was this all by design? I think history will tell us this, but it definitely seems like this goes much, 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 much deeper than just simply Sam Bankman-Fried, and Alameda. It goes much, much deeper. So we will continue. As the story unfolds, I will keep telling you guys everything that I'm seeing. And now we're going to dive into the charts a little bit. So having a look right here, we do have the DXY looking like it might have a bounce. That may potentially, affect things in the short term. Having a look over here, we did see stocks open up a little bit lower. It looks like stocks are attempting to bounce off of the support right here. Maybe we will go up and retest around 39.77. Maybe it will continue all the way up to this major downward sloping trend, which I do still think is a possibility, although there are a lot of people that are anticipating that happening, right? So, maybe in that sense, it doesn't actually happen. But nevertheless, guys, Bitcoin is sitting at this very critical level. Right here, you can see we're just kind of hanging out. We are sitting above both of these major supports, but we're not really making any major moves, which is a bit of an issue right now. We're still just hanging out. And if I actually zoom in, this is the 4-hour, very, very low time frame. You could see that we are clearly being held down right here by this resistance. Every single time we've ever come up to this level, we've been held down, and we're just bouncing and consolidating and consolidating. And, if I zoom in right here, you can see how many times we've attempted to break out. We keep falling below it right here, right? We attempted to break out. We keep falling below it. Now, originally, when we had broken to this point right here, I was feeling a little bit more bullish on this move. I did think that we were going to have the breakout. Once we did get the rejection and the consolidation, I definitely flipped to about a 50-50 right now. And I know, I get it. I can hear people in comments, oh yeah, 50-50. So if it goes this way, you're right. If it goes that way, you're right. I'm not claiming to be right on any of this. Whatever it does, I'm not claiming to be right. I'm saying we are setting up for a big move, and it's going to go in one of these two directions. I was more bullish in the beginning of the week. Now I'm 50-50. That's all I'm saying. Once we get the move on this, then I'll know. Once we break into, some kind of structure, hit something as resistance, bounce back or bounce off of support or something like that. Right now, we're just doing this consolidation. Obviously, if we break to the downside, there's a little bit of support on this upward sloping trend. That's around 16,000 even, but then you risk falling down and retesting this pivot low again at around 15,500, right? On the flip side, if you want to look at the positives, and you could very, very clearly see, and if you really want to break down, truthfully, if you're going to go like traditional technical analysis, this is a bear pennant. That's what we're doing. You come off a move like this, you do this, and the measured move, if you really wanted to do a measured move, taking this pull from top to bottom right here, technically, if we had a breakdown from this level, that should bring us all the way down to about $10,000. Now, do I actually think that we're going to hit $10,000, guys? At this point, with everything going on, I truly don't know. I wish I could give you that answer. I wish I could tell you what is really going to happen, but, I don't know. But what I can say is we do have a lot of resistance in this area right here if we do attempt to break. So you could see between around 17.6 and 17.9, pretty much just under 18, we're looking at a lot of resistance. What you need to do is get back up here and flip this level, this very important level at around 19,500. We need to either get rejected and then, okay, we got rejected, we're probably going lower, or I guess we could just straight up just dump from here. That's a possibility. But what you'd want to do is break up here, come down and retest it, and then continue. Now, that would be very bullish, not like super bullish, but short term would be bullish for Bitcoin. And, that would be the trade I would feel more confident taking. But as I showed you guys, this is the legacy trend. And we've never closed a weekly candle below this ever, dating all the way back to July of 2017. So if we did break and close below this, you would be, as of right now, even with this dump, I still think Bitcoin is fine. The 4-year cycle, we've gone over this on the channel. Everything's just fine. It's still playing out. But if we break below this, this could be a catastrophic structural change in the Bitcoin price, something that we've seen for 5.5 years. Breaking that could be pretty devastating for the price. The only thing, and, as days tick by, as time ticks by, this becomes less and less likely. We still have about half the month left, but it is starting to dwindle. What you would need to do is to get this level back above this line right here, right? This is closer to 19,400, but 19,400, 19,500, depends on what exchange. I'm using Bitstamp for this particular, chart. But you see like this tail that we had right here where, let me see if I could actually see what that looked like more on the daily to go back so you guys get an idea. You see how messy this looks on the daily right here? It doesn't really look like anything. It's just kind of like, okay, we came down, we wicked around, we bounced back up, right? And, but actually you can see the resistance right there, which is pretty incredible. You can see the resistance right there on the line. You can see the support right there on the line, right? But then, obviously switching it back to the weekly, you get that very, very clear view of, closing above that level. And that's exactly what I'm not saying I'm looking for that monthly chart. Sorry guys, the monthly chart. But what I am saying is that's probably what we would need to do. Because if not, then it just kind of puts us, in an area like this, really, where we could go lower and, end up having a rounding bottom like this, like we did here, right? It's just the facts, guys. But either way, I think they have dragged this bear market out a lot farther than it normally would have gone. But nevertheless, you're seeing right here. So let's talk. But that's basically what we're looking at in the charts. Obviously, if you guys are interested in trading, you can check out the tutorial. It's kind of, I get it right now. People are freaking out. They don't want their coins on exchanges. But unfortunately, if you want to take trades, you got to trust them. So we've gone over this. But anyway, so Gemini, OKX, and Crypto.com have experienced severe outflows over the past week, while a declining stablecoin market shows an investor exodus. This is according to JP Morgan Chase. Exchange volumes have fallen throughout the year, according to the block's data, with monthly volumes dropping from around 841 billion in January to 544 billion in October. And this takes us back to the fact that, in the beginning of this video, I was talking about, and this is over at Glassnode, that we've seen the lowest amount of, Bitcoin on exchanges, severe drop right here, which, by the way, the SBF and FTX weren't even holding any Bitcoin. Like, okay, whatever. That's for another story. Anyway, so you can see right here, it has fallen off. And what does this mean? Well, we can take this in two ways. The first way that you can take it is that this is good, right? People are taking their coins off exchanges. So that means there's less coins on the exchange, which means there's less coins that can be bought, which means if people do come in and decide that they want to buy crypto or they want to buy Bitcoin, there's not as many. The order books are thinner, right? So they'll push the price higher. That's the theory. But what about the flip side? What about the flip side that there is lower liquidity? And what if there is another random black swan or something from the contagion, or who even knows what could possibly come out next? I mean, I at this point, I don't know what could even be the next big news. But if these guys decided that they needed to liquidate and they needed to liquidate fast, well, now we have a problem in the reverse direction. So while normally we should be taking this as a positive sign, if we're having big players that go bust in the next couple of weeks and decide that they need to sell their Bitcoin, and Genesis, right, huge OTC loan, they're gone, right? So maybe what do they do? Head over to Binance, crash the order books? See what I'm saying, guys? It could go either way. Now, I just want to revisit one more thing, which we spoke about a week ago on the channel, and this is the MVRVZ score. And I just want to point out that we have officially gotten very, very deep. Right here, you guys can see very, very deep into the green. And I just want to point out, and shout out, by the way, to the people that pointed this out in the comments. If we look at where this bottoms out every single time, you can see back here in October of 2011, it was negative 0.8. Then we come over here, right, and we have January. I can't really seem to get the exact bottom, but it's somewhere around 0.45 to 0.5. And then we come over here, and it's 0.5. And then we come over here, and it's 0.2, and then we come over here, and it's 0.32. So what's crazy is this has actually dipped lower. No, I'm sorry, this went to 0.26 in the COVID crash. So it hasn't dipped as low, but what we've seen over time is that the score seems to be getting a little bit higher each time, but whenever we find ourselves down in this area, you could see historically right here, I mean, look at this area right there on the chart, phenomenal buying opportunity. Right here, phenomenal buying opportunity. Right here, you guys know what I'm going to say. Buy opportunity, buy opportunity, buy opportunity. So could it get worse, guys? Could it go lower? Yes. But historically speaking, this is the area we are looking for dollar cost averaging. So not financial advice, obviously, even though that doesn't even hold up in court anyway. I don't even know why I say that, but I feel like it's in good nature to say not financial advice. But what I do and what I continue to do is accumulate. And these levels to me are the levels that I've been waiting for. And I will continue to accumulate harder at these levels. Of course, keeping a cash position on hand. It can be hard. It can be tempting to buy the dip. I just think when you look at the risk to reward ratio, we're already at 16.5. Could we go to 10? Sure. But we could also go to 500,000 and 1 million in our lifetime, especially when these big players come in. And I could tell you what these guys are doing, their policy is not going to work. And inevitably, I believe Bitcoin will have a place to stay. And I don't think that they'll eventually be able to push it out of the space. So that's just my 2 cents, guys. I want to keep this video a little bit short. My battery, literally just got done saying my battery was running low on my camera. Good thing I had a backup. But that's basically it for me today, guys. So much we could go over, so much we could talk about, but I can only fit so much in this video. Keep watching, get subscribed, guys. Turn on the bell notifications, follow me on Twitter, and we will continue to follow this as it plays out. Obviously, once we get a little more excitement, happening in these markets, We get some price action on these lower time frames, you know, trying to break out again. Like I said, I think we're due for a bounce, but you know, will we get it? You know, how far does the crypto contagion spread? That is like the $1 million question, right? So thank you so much for coming back to the channel. You guys rock. You're the reason that I make these videos. I hope you have an awesome day today. My name's K-Dub. This is Crypto Zombie. If you haven't checked out this video popping up right here, check it out right now. Until next time, stay crypto. And of course, peace out.